In today's video, we're going to discuss what can make you go broke playing TSLY, which is the Yieldmax covered call fund on Tesla that has a monster dividend. We're going to be dispelling 3 Yieldmax myths that I hear all the time at this channel, especially as it pertains to TSLY because its stock price is down. Okay, so we earn over $150,000 per year in dividends at this channel. And my performance and value shows that I'm up about 23% for the year, which is beating the S&P 500. We were beating all indexes up 50% for the year in the month of October, but we had a fall during that month because all closed-end funds fell during the month of October. Okay, so I'm living the FIRE lifestyle, living financially free out of my brokerage account, and you can too. Email me for my e-guides at aikentodd48@gmail.com if you're interested in doing the same. To all newcomers at this channel and even current watchers of this channel, for every $1 you put in your account, you get $4 of purchasing power, okay? I just use a fraction of this purchasing power to get ahead in this world. After all the greats that I know of use debt to get ahead, good debt, okay? My income of about $150,000 per year in dividends should pay back this debt of $155,000 in about 1 year. My account will then be plus $150,000. I'll be at around $600,000, and my debt will be at zero. Then I'll be left with all these dividend-paying assets to myself, qualifying to banks for loans for life and paying my bills for life. This is the key to the FIRE lifestyle. Okay, all these funds that you see here on the left will cash flow and eventually double. And not only will they help me live financially free out of my brokerage account and pay my bills, but they, again, qualify to banks for loans. Okay, this is the key because you need a job to get loans, or not even just to get personal loans or credit card loans or whatever, but just to get a housing loan or a car loan. Okay, you need either a dividend or a pay stub. They won't take trading gains. The banks won't take them. I've tried. Okay, this is low interest debt. It's good debt as it's invested money. I negotiated my interest down to about 6%. I had my interest down all the way down at 3%. But interest rates rose. So I've helped many clients of mine who bought my e-guides negotiate their margin rates down too. All right, this doesn't show up on credit checks, this debt, and you can click sell at any time. Okay, I think it's better than credit cards because the interest is lower than credit cards. And when you pay back a credit card, you get nothing for it. When you pay back the debt here in a brokerage account, then your account value grows by the equivalent amount that you paid your debt back by. So I think this is the greatest way to live the FIRE lifestyle, in my opinion. And again, you can do this too. So, all right, because everyone gets purchasing power in their brokerage account, okay? And everyone can access these funds and buy them. It just depends on the broker. All right, so let's go ahead and get into the first reason, okay? The first myth that I wanted to dispel about these Yieldmax funds. Okay, now in the last video I made, I showed you Microsoft, I showed you Cornerstone, I showed you that yes, that they erode too, but they can do well if the underlying is doing well. In Cornerstone's case, it follows the S&P 500 and the NASDAQ. And in Microsoft's case, MSFO, it follows Microsoft. So, of course, those underlyings are doing well. The net asset value that their value is based on is doing well. Okay, and if you have a stock that falls, like in TSLY's case, okay, TSLY's been kind of weak for the past, few months while the rest of tech has been rallying. Okay, so let's look at a stock price of Tesla. And I've been getting so many negative comments in my comment section, especially in the last video, about this topic, okay? And it's like, I don't understand how to explain this to people. This is just basic investing, okay? If the NAV dwindles in TSLY, then the premiums dwindle, and then the dividends dwindle. This is a given, okay? So again, if a stock price falls, if you don't understand how options work, then the options prices fall too. And TSLY, we're not banking on whether they can keep paying this large dividend. We're banking on the volatility of Tesla. Tesla has around a 60% volatility rate. Let's just say, just to be safe, let's call it 50% IV, implied volatility. Well, then the dividends can be 50%. Okay, so as far as I know, unless there's some other mechanical structure that I'm missing in the background, this is how Tesla is going to continue to get its dividends, is off of the volatility of Tesla. So if the stock price of Tesla falls, then the volatility falls, okay? And that's how premiums can shrink, okay? So this is just a given. Once again, I heard someone say that this is amazing that you don't know what a NAV is. I mean, they use the NAV as collateral to borrow and to sell, I should say, to sell options against their NAV collateral. All right. And so if the NAV falls, then they have less money to sell options with. But I mean, that's a given. Okay. When the stock falls, when Tesla falls, then TSLY will fall with it. As we know, it follows the stock down as much, and it doesn't follow the stock up as much, but it will definitely follow the stock down in full amounts. Okay. That's one downside of owning Yieldmax funds versus owning, different covered call funds that don't sell the put options underneath that make it track the stock down one for one. That is one downside of Yieldmax ETFs. But I mean, what else do you want them to do? Okay, they have to pay this large dividend and they have to mimic the stock price somehow. So they sell the puts to do this. And so again, when you buy a stock like Tesla and it falls and falls and falls, then you're supposed to lose. Now, that's just the way investing works. Sometimes when you buy stocks, they don't work out and they go down. But in TSLY's case, even if the stock falls, Tesla falls, then TSLY will keep paying dividends. The dividends might shrink. They might go from 60% to 50 to 40. But in my situation, I'm just looking for payback periods that are better than real estate. In real estate, the payback period is around 15 to 30 years. Okay, assuming a flat market. In the stock market, I can get payback periods for less than 5 years when I own something like Cornerstone. Okay, TSLY, I can get the payback period or double the investment in about 2 years, because a 60% dividend, you double in a little over a year. Okay, in Cornerstone's case, which Cornerstone, I always say it's a 5-star fund. It fluctuates between 4-star and 5 stars. It beats the indexes, as you can see there. But if you look at a chart of Cornerstone on its E-Trade chart, which I showed you in the past video, it goes sideways over 10 years. But here on the Morningstar chart, it's an upward left to right moving chart, and it beats the indexes. And that's because you got to factor in dividends and drips. The same goes for Yieldmax funds, okay? You got to understand, like, even when a stock goes down, that's one way it can erode. It can erode TSLY's performance if the stock goes down, obviously, if the underlying goes down. But it declares dividends. Okay, X dates make the stock drop. This is true with any fund, whether it be TSLY, Cornerstone. Cornerstone, I get this argument so many times, like Cornerstone's going to zero, but it's a 4-star fund. I just showed you on Morningstar, and it has a 21% dividend that it drips down at the NAV each month. Okay, so that's how I really clean up in Cornerstone, and I play this fund properly. You just have to toggle that special drip or ask for it. Some brokers, you need to ask for it. And so it gives you return of capital. So it issues your own shares back to you, which people say is a death spiral. It's going to make the stock go to zero. Okay. Well, return of capital is tax-free, all right? So even if Yieldmax ends up doing some return of capital, this is a good thing. They're returning your shares to you, but it's tax-free, and as long as the NAV is growing, it's a good thing. Now, if TSLY keeps dropping and dropping and dropping, Tesla keeps dropping and dropping and dropping, then you don't want to see return of capital, because it's just issuing your own shares back to you at a loss, basically. But if the NAV is growing, so if Tesla is going up and they issue return of capital, then you're just getting tax-free dividends, okay? And in Cornerstone, again, not only are these tax-free dividends, but you get the special drip down at the NAV. So Cornerstone has rights offerings. You have to play this fund properly with rights offerings. That's how most closed-end funds work. I have a Volume 4 e-guide on Cornerstone if you need help playing Cornerstone during its rights offering periods. Okay, so now with TSLY, okay, we don't know what a stock's going to do. We don't know, but the dividends will cash flow. Even if the dividends diminish and go down and down and down, again, will eventually cash flow. Even if the dividend falls to 10% in TSLY, well, then we wait 10 years for the payback period, and that's still better than real estate. All right, so, I mean, I don't understand why people are overcomplicating the TSLY situation, okay? Again, this sounds just like the arguments I hear for Cornerstone all the time. Cornerstone, it's going down into the ground. I'm not going to show you the chart of Cornerstone because I did that in the last video. It goes down, down, and down, but I just showed you the Morningstar chart. So I would think TSLY would be a similar thing, but with a bigger magnitude of X-date drops because it has a bigger dividend than Cornerstone. Okay, but Cornerstone keeps defying all the odds. Okay, you know, all the people who have hit pieces against Cornerstone, look, it's a 4-star fund. Really, it's 5-star. And again, it beats the indexes. So why would TSLY be any different? Okay, yes, it doesn't have the special drip at NAV. All right. And you don't want to drip TSLY dividends, in my opinion. Yes, they help offset NAV erosion some, but if the stock price falls by bigger amounts, which it definitely can, then you have a better chance of dripping in the open market, waiting for bigger market swings in TSLY before actually dripping those shares manually, automatically each month. I'd rather manually drip my TSLY shares on bigger market dips. Okay, so then the next line comes up. This is the next myth that always comes up for TSLY, okay? Because it's the same thing as Cornerstone. Cornerstone can do reverse splits, all right? And that's how the stock price keeps itself from going down into the ground, okay? People think, well, is Cornerstone just going to go to zero, okay, over time? Well, you can do reverse splits, all right? And this is where everyone gets hung up. Has anyone ever heard of a stock split, okay? It's a meaningless event, okay? Stock split or reverse stock split. The only time that those have any effect is when the company is trying to change its image. So if the company's stock price fell too low and they do a reverse split, they might want to do that to make themselves look healthier than they are, or to get more institutional investors on board, because some institutional investors can't even buy when the stock price is a certain price if it's too low. So yeah, you might have companies do reverse splits for cosmetic reasons, but when a fund like TSLY or Cornerstone or AMSA, as I illustrated in the last video, when they do a reverse split, the dividend is unchanged. I keep getting these comments, well, if the dividend is unchanged and they do a reverse split, then your dividend has been cut in half. Yeah, no, look, I mean, guys, come on. A reverse split, it says here, the dividend becomes 5 per share or 5 times the old payout, but the dividend payment is unchanged. Yes, I'm saying the dividend is unchanged during stock splits or reverse splits, okay? So if the dividend is unchanged and they do a reverse split or a stock split, either one, okay, you can't say, well, if the dividend's unchanged, they split, you get half the amount of shares, well, then you're going to get half the dividend. No, the dividend reflects the split. Okay, I don't know how else to say this. Again, I got so many negative comments, probably, you know, from 5 or 6 bad actors in the last video. And I don't mind negative comments. They don't get me down. What I mind is them swaying other people into not understanding how to invest properly, especially with the dividend approach, okay? The dividend approach is just take the dividends, okay? No matter what the stock price does, we don't care about stock prices. We're agnostic to stock price moves. The plan of paying down your margin debt is uninterrupted each year. It doesn't matter what happens. Cornerstone, they set the 20% dividend for the year, so there are no surprises in Cornerstone in that way. And then for Yieldmax, yes, the dividends fluctuate because the premiums fluctuate, or distributions. You want to say they're dividends or distributions, I don't care. Who cares? There's another guy who's a stickler in my comment section for that. Dividends, distributions, okay, monthly income is what I like to call it, and that qualifies to banks for loans. So as long as I'm getting this monthly income, whether you call it dividends or distributions, I'm happy because it's paying down my margin debt. Okay, and a lot of people ask too, I just want to clear this up. They say, well, if you drip your Cornerstone shares, how do you ever pay back your margin? Well, I use the rights offering to pay back my margin. I don't sell the drip shares immediately because I want to compound my income. But when the rights offering comes, that's when I dump everything. You know, you sell everything before the rights offering and you buy it back after. And that's what my Discord alert service was made for. Okay, Discord, you can track my portfolio, and there are other channels here like Yieldmax channels, Bitcoin channels, you name it. But we also have a Cornerstone channel, which we alert you of the rights offering in Cornerstone. Okay, so we have over 500 members there on Discord who can help you with their unique experiences in the marketplace. They can answer your questions if you have different brokers. Because here's the next little thing that comes up all the time. A lot of people say, well, because I'll also say this, you need to watch your maintenance and Yieldmax names, okay? Those can make you go broke too. I mean, people don't understand this. People think that maintenance is a non-factor if you're not using margin. But the fact of the matter is, if you want to live the FIRE lifestyle, Okay, you have to be able to withdraw. So I have a 447 account value, but my available withdrawal is 211. This means I can withstand 30% corrections overnight or over the course of a month. I can withstand that and withdraw freely out of my account. I can pay all my bills through E-Trade. Okay, my debit and checking card is linked up to all my bills. So all my bills get paid automatically, and I can buy cars, clothes, shoes, travel the world, do whatever I want with this available for withdrawal numbers. So if you have high maintenance and you're at a bunch of Yieldmax names that have 50% maintenance like they have at E-Trade, okay, TSLY, as I've showed you in prior videos, this is the secret to living the FIRE lifestyle. And for many members here, they say it takes them many videos to have this point sink in. So I'm saying it over and over. Look, the margin maintenance requirement of TSLY is 50%. And I showed you Microsoft in the last video, it's 30%. That's an outlier for Yieldmax funds. But at E-Trade, they're 50%. So that means if I put 100,000, if I put all my money into TSLY, 400 grand, then I would only have 200 grand left of withdrawal, okay? And obviously I could do that and withstand market corrections that way and stuff too, because that's what my available withdrawal is right now. It's around 200 grand. But Tesla can fall with headline risk. It can go to zero. We don't know what can happen to Tesla. So that's why I tie most of my investments to these index funds, so that when they fall by less amounts than stocks would. Okay, so this is what happened. This is where the next little myth comes in. People message me in the comment section, well, the Robinhood maintenance is low for TSLY, so you can load up more in TSLY because the maintenance is lower at Robinhood or IBKR. Yeah, but if you keep loading up on this fund, it could fall and hurt you because it's a stock. It's based on a stock, and stocks can fall and hurt you. And again, also, you're not. The other caveat to that is Robinhood or IBKR don't have the special drip for Cornerstone. Okay, the special drip here, some like, I don't know if Robinhood even offers Cornerstone, but some other brokerages have Cornerstone, but they don't give you the special drip. This is just free money you get every month. You get a couple of $1,000s of extra money each month on top of the 21% dividend. And again, this is how you complement your Yieldmax strategy. You invest in index funds that fall by less amounts than the stocks could. So, erosion. Let's just summarize this. Erosion. Of course, if the NAV dwindles or if Tesla falls, then the premiums dwindle, not the dividends. The premiums from the options dwindle. When the stock goes sideways or down, the premiums dwindle. That makes the dividends or distributions dwindle. This is just a given. This is just called investing or option investing. Okay, don't overcomplicate this. And then for the stock split, this is what happens: is the stock keeps going down on X dates, because whenever a fund or stock issues its dividend, it drops by that amount on the X date. So it's going to cause NAV erosion. This is a given. But what you do is you just let the dividends pay you back and double your investment, okay? Then if the stock goes too low or the fund goes too low, you can do a reverse split, okay? And this is where everyone keeps getting caught up. Reverse splits, the dividends are unchanged. So they give you twice the amount of shares or half the amount of shares, whatever you want to call it, in reverse split or regular split. But after the event is done, then the dividend is unchanged. I just showed you the definition. I can't keep showing you this again. This is just basic investing. And then lastly, if you think that you can avoid, if you can just, buy all the Yieldmax funds that you want, okay, and avoid the large maintenance penalty, which is, by the way, in my Margin 3 e-guide. If you need help understanding maintenance, that's in my Dividend Margin e-guide, How to Live Financially Free Out of Your Brokerage Account, okay, using the power of margin and dividends. Okay, maintenance, all right, is everything. And if you think you can avoid this maintenance issue to live the FIRE lifestyle by going to a different broker like Robinhood, well, then they don't offer the Cornerstone drip, and you have to complement your investments with indexes. I just choose Cornerstone as my preferred index play. I mean, I also have Defiance, JEPY, QQY, all right, but they have higher maintenance. That's why I don't have as much in them, and they're unproven. Yieldmax is also unproven. So if they fall from here, okay, whether it's from stock splits, the underlying, going down, or the dividend X dates dropping the stock, this is what investing is. Don't overcomplicate things. These points are all given to the educated or informed investor. If Yieldmax funds fall unexpectedly, it will most likely be for reasons that I'm not saying in this video. So let's focus our attention to what those reasons could be so we can all make the most informed decisions possible at this channel. All right, so I think that'll do it for the video, guys. Remember, if you need more help doing what I'm doing, living financially free out of a brokerage account, email me for my e-guides at aikentod48@gmail.com, and I'll talk to you soon. Thanks.